What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the SPY, the Nasdaq, the QQQs, and the indices, break down what the charts are telling us, what you should be watching for the future, and why you should be very cautious during times like this. I'm also going to break down what the news is saying and how this may affect the overall market, and why, once again, we have to be very, very careful. Before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends today, so make sure you check it out before they run out. With that out of the way, let's get on with the video. So the real question is, what's going to happen to the markets? Is the market going to just keep pumping, or is the market going to tank? I want to break down what's actually going on with these indicators. Are we just going to keep going or not? And also what the data tells us. Now, to start us off, we were hit with some bearish news that came out, and that is because of the fact that OPEC is actually planning on cutting their production, their oil production. This is important because if they do end up actually, fulfilling their words and end up cutting production by 1.16 million barrels per day, that's going to lead to inflation going up. The reason for that is because when energy starts to increase heavily, it actually has a trickle effect on many different sectors. And that could actually lead to higher CPIs going into the summer, maybe going into like this month, even if that happens that soon. Now, this is very important because this will actually cause the Fed to be more hawkish, and it's going to decrease the odds of any pivots anytime soon, even any pauses as well. Now, right now, the market doesn't seem to care about this. The market just keeps going, it keeps going. It's not a big deal to it. That's not a good sign, because if we're hit with a hot CPI now, we have to be very careful. I also want to note that when it comes to the news and the data, we actually had some JOLTS job openings data coming out tomorrow, about 30 minutes after the market opens. The market will respond to that depending on what the jobs numbers look like, and we will make a big move, in my opinion. We also have some Fed speakers later on. Later on during the week, we have more like mortgage data, some gas data, jobless claims, and then we also have even more important jobs data, especially on Friday. We have the unemployment rate coming up. So this is like the week of jobs before we have CPI and other things coming out for like next week. So we have quite a bit of data coming out. This is once again the jobs week. Very, very important stuff. It will affect the market. As far as the options chain goes, nothing too significant is happening for Tuesday and Wednesday. Today, we did have quite a bit of puts expiring out of the money. Once again, market makers tried to hold the markets up, but as the market was holding these levels, we actually saw a lot of the quote unquote smart money or institutions out there that started actually selling, and they're actually continuing to buy puts at a higher rate than before. They're continuing to short the market at these highs, and this is not just like retail, this is actually the big money indicators that are telling us this. That's because of the big flow from unusual whales and other very, very useful tools. Now, right now, the option chain is not that crazy. We only have about 133,000 puts expiring tomorrow, and around the day after 160,000. So it's not as crazy, and that tells me that there is a chance we could see a slowdown, but that will depend on the data that comes out, what the jobs numbers tell us. We saw quite a bit of shorting going on in the markets. We also saw a lot of people holding calls that got destroyed on Tesla. Also, I think for Apple, it was very similar, not as bad, and Amazon too. A lot of people, the majority of them, were actually holding on to calls. And once again, we did see our favorite stocks end up underperforming a bit, especially Tesla. But now the question goes, what is the market going to do? SPY was stuck between 411, the 411 zone basically, and also around 408 today, going back and forth and back and forth. And for the time being, we actually got an end of the day push up from the markets, but we actually saw the tech sector slow down and the consumer discretionaries underperform after Tesla and NEO and other stocks out there, other companies had relatively not necessarily weak, but not the strongest deliveries compared to expectations, right? Expectations for Tesla were a lot higher than what we actually got, or at least they tended to be. And we actually expected Tesla to do even higher in terms of deliveries. They did come a little bit short. So as a result, we did see a bit of a sell-off, but it wasn't that horrible since Tesla tried to bounce at the end of the day with the markets. But the real question is, how are we going to perform from here? We're basically stuck between these very important support and resistance levels again, and the market is still holding up. Now, yes, I mean, what's crazy about this market is the market could just keep going on low volume, but the problem is, firstly, we lack volume. We're not getting the same volume as before when the market was pumping very hard. We don't have it right now. And if the volume remains low like this could slow us down. You also have to account for the fact that this week we have a very short trading week because this Friday is considered Good Friday. And the market is typically closed on Good Fridays in commemorance of the day. So we don't have trading on Friday. So with less days coming up and a long weekend, we tend to see the market slow down a bit. We also tend to lack volume, and that does favor the bears, at least to some degree. I'm not saying the market has to crash from here or anything like that, but I do believe we are due for a healthy pullback. And this is just what the indicators are suggesting. Sometimes crazy things could happen, but I just want to note this. The RSI is still around 64 on the daily. The MACD is still in favor of the bulls technically, but we do have some weakness in a way where SPY did get slowed down around 411 or around the 411 zone. So we're still in the middle, but I do believe technicals are telling us that we should cool off soon. The RSI on SPY is at 73 almost. MACD is now getting flat. We're just getting ready to see what's about to happen, and the market is still indecisive. But what I think is most likely going to happen is a big reaction to the jobs numbers. And we have to be prepared for anything, right? If we're bullish, if the market still wants to keep going, if it breaks 411, the zone around there, 413 could come pretty fast, right? 413 is going to be very important. But if we're bearish, the most bearish thing that could happen would be breaking the lows from today. If we break them, that's going to be confirmation that the trend is once again now starting to reverse temporarily, and we could get a healthy pullback. Now, if we break below 408, or at least the lows from today, we're most likely going to see this thing come all the way down to like 403 or so to fill the gap down here. And that's most likely going to be the case later on. I just don't know if it's going to start tomorrow or if we're going to pump more and then end up dropping. It's very hard because we were hit with so much news. Janet Yellen came at the end of the day and she said that the banking sector is very strong. It's starting to stabilize, and we have the Fed to support us. The data is just very mixed, and the market signals are very mixed too. We're overbought. The market signals, the technicals are telling us we want to cool off, but the market just has not cooled off just yet. We just keep getting bought up. We're still holding up. So the best thing I'm doing is just waiting on the sidelines and just getting ready. But I once again think the odds are still favoring, right, that we either push up a little bit more and then get a rejection. The market just starts to trade sideways for a bit, then cools off, starts cooling off the RSI. We should come down to maybe fill this gap eventually before we get another bounce later on, and we just start pushing up. And because the market's holding up this well, I'm starting to think that this, the potential head and shoulders on SPY is looking a little bit less likely now, because the market once again is just continuing to hold up quite nicely, and we do have a lot of strength right here. So what this makes me think is we could be making like three tops. Right here we had one top, then we made a higher top. We could be making a third higher top later on. It's very possible. If we break the high we made where this head is, that's going to invalidate this uh, head and shoulders. And if that's the case, then we do have a lot of room to start filling a lot of these gaps up here around like the 420 zone, or even all the way up there. I do think that move will most likely come. I think SPY is going to most likely get to 420 eventually. But before it happens, we should pull back and then establish a higher low and then try going there. At least that's what I would love to see. And I do think the odds still favor that, because we are still, once again, not breaking above this channel in a very clear manner. We're still stuck here. And once again, the technicals are just looking very overbaked right now. They're very overbought. I think it's still due. So we just have to be patient. And I do believe we're either going to push up more and then eventually start retracing, or we just start retracing as soon as tomorrow, depending on the data. Now, for SPY, I just want to note some important retracement levels. The 0.236 is currently around 404. Then we have 399, which is the 0.382. We'll just have to wait and see if we do meet those zones. And this could get adjusted depending on where we open tomorrow. But for the time being, I do believe, once again, we're likely going to push up more and then retrace, or we just start retracing very, very soon to just cool off. NEO did not have the strongest of deliveries. It had about, I think, like just over 10,000, which you might think is good, but what's not good about it is it's a big decrease month over month for them, and they just barely met their goal for Q1, the lower end of their goal between 31 and 33,000. Not a good sign. I'm thinking Neo might bounce, try to get back to 10, and then ultimately it's going to fail. And we're likely going to see a downtrend starting to be respected on this thing. Microsoft is likely going to try to pump a little more, try to get to this like 290 area. But what's interesting about it is Microsoft has a tendency of getting rejected around 290 to 292. At least the last time we had this major pump, this thing got rejected hard around 292. Now, I'm not saying it has to crash or like reverse after it hits this very hard, but I think that it might try to pump a little bit more and then reject and start coming down. A very clean confirmation of this thing starting to downtrend would be a break below the lows from today. And if that's the case, if it breaks below like 284, it's likely going to come down to fill this gap around 280. All right, so Microsoft might get to like 290, maybe 292, maybe. Then it's likely going to fail and start coming down. Retest 284. If that fails, then we're going to be watching 280 to fill this gap on Microsoft. For I want to talk about AMC. She's holding up quite nicely. The structure is looking technically it's a little bullish since it is actually above $5, but it's going to be heavily dependent on what happens to the market right now. If the market ends up selling off a little harder than expected, then AMC is likely going to come below $5. If the market holds up for the time being, it's likely just going to chop back and forth. What's not good about AMC though is the volume is just lacking. It has no volume, and that is not a good sign during times like this, because what's going to happen when volume starts to increase? It could sell off on high volume. That's going to be bearish. For the QQQ, this is actually kind of mixed. It's still stuck around this like 320 zone. I don't know if the QQQ is going to just start, slowing down from here. It did close kind of red. It started to come down to fill some of these gaps. I don't know if it's going to do that first and then continue, or if it's going to pump a little more, try to get above 321, just keep chopping around, try to get to like 324 or so, and then start reversing. Most likely it's going to be one of those two. But once again, I still believe the QQQ is still overextended. If you look at the RSI, it's quite overbought. I mean, this RSI is still at 67, even though it's red, which is pretty crazy. On the hourly chart, the RSI is all the way up around 67 almost. Still is overbought, and it is due for a slight pullback. I'm thinking that it might push up a little bit first and then pull back a bit to retest some important levels. And if that ends up being the case, we have to see if this thing could hold this 318 level. If 318 ends up failing, then we're going to be watching around almost 315. If that fails, there's the notorious gap down here around this 313-ish zone. If that ends up getting filled once again, that would lead to some more downward pressure for a lot of stocks out there. The VIX is holding 18.5 so far. So far it's trying to hold up, but I don't know if it's going to bounce yet. We don't have enough data yet to see it. If it bounces off here, that would be bearish for the stock market, forming a double bottom. But for the time being, we'll just have to wait and see if it tries to hold 18.5. If it breaks below it, it could come all the way down to 17.8, if not 17 flat. If that ends up being the case, that could also be because of the market continuing to go, at least for the time being. I also want to note that on the daily of the VIX, uh, it's actually starting to show some strength because it came down to this 18.5 area. It tried to bounce and ended up failing today, but it didn't actually break below 18.5. That's what's very important. So we'll just have to wait and see what the VIX ends up doing. I believe the VIX will be pumping in a couple of weeks later on. I just don't know where it's going to bottom. I don't know if 18.5 is it for the temporary bottom or if it's going to come lower. We'll have to wait and see on it, but the odds do favor it trying to hold in around the 18s and trying to get a bounce. If that ends up being the case, once again, that's going to be because of the markets turning more bearish. Amazon, so far, Amazon is actually indecisive. It's just stuck in the middle, continuing to chop. It looks to me like Amazon was in a topping process between this 102 to 103.5 area. If it breaks 103.5, there is technically 105, so just watch that as a bullish case. But if it fails, which I believe it most likely will eventually start to come back to fill this gap around this like 100 area, it's starting to show some weakness right now. I don't know if it's going to pump a little bit and then try coming down, or if it's just going to start downtrending tomorrow. Either way, I do have a target of about 100 for Amazon. It may even come lower than that, but I do believe it's due for a pullback, and it's very necessary during a time like this. For Tesla, Tesla's a little bit mixed because it was already down like 6% after deliveries. Deliveries were not horrible. It's just that they were not aligned with all expectations. And the expectations for Tesla tend to be not just it meeting expectations set by Wall Street, but also beating them. So now that Tesla's bouncing off this important 192 zone, it might try to keep going a little bit, might try to get to almost 198 and end up failing and establishing a lower high. Then we might see Tesla start to come right back down and start testing these lower 90s later on to eventually come down. If it does fail at 192, it's going to most likely come down to 188, but we have to watch 192 very carefully. 188 is also very important, more like actually the 187 to 188 zone, because if it fails there as well, it's bounced off here many times, but if it fails, then Tesla's most likely going to end up coming all the way down to the low 180s. Once again, this is just if it fails at these important levels, but we have to remember them from the back of our minds. I am seeing Tesla trying to bounce a bit. We did see a lot of call buying and also a very big sign of strength after it got this nice bounce off 192. If it does bounce, as long as the jobs numbers are like pretty decent, it could try to hold up a bit. But I am anticipating that it's going to establish a lower high. I don't really see it coming all the way up to like 208 unless there's a very bullish catalyst. So far, I'm not seeing it. I'm thinking Tesla's going to establish a lower high, then eventually start to cool off as time goes on. And eventually, it's going to retest the very low 190s and maybe cool off a little bit more until it comes time for earnings where it starts to rally a bit. That's what tends to happen. NVIDIA, one of the things I mentioned to you guys is that NVIDIA is most likely just not completely done just yet. And we have to be very cautious. I told you that NVIDIA could end up downtrending later on. Before it happens, it could try to get a pump back to these highs it made previously. Now, what I'm thinking about NVIDIA is the fact that if this thing could get a break above this like 280 area, it has a lot of room to just try to hit these new levels, get very close to this 282.5 area. But I want to note that it's not as strong as what it was looking like before. You could see it's just continuing to get rejected over and over and over again. So NVIDIA is just in the middle right now. I also want to note that for NVIDIA, we're most likely going to see it hit a very important level. I think that was around I think I had around 282.5. It might reach this like tomorrow and then reject after that. But I do have a target of around 282.5. Could go a little higher. And then it's going to likely reject, maybe slow down a bit. But I do believe it's going to try to pump a little with the market and then end up slowing down. But once again, like I said, we have to be very careful with it. Apple, once again, showing some strength, hitting this 166 resistance that I was talking about. The real question is, could Apple get all the way up to 168? I mean, so far it has not shown the weakness to come down. So I think Apple might try to go a little higher and end up getting rejected and then start to downtrend a bit. I do believe it's starting to show some signs of exhaustion. I mean, the RSI is at 78 right now. It is crazy overbought. It is due for a pullback. I'm thinking it might push up a little bit, then start to pull back later on. That could drag down the markets. But for the time being, let's just watch this 166 level and see if it holds it. If it does end up breaking above it, we have to watch the 168. But once again, my guess is we're most likely going to keep going a little bit, then reject and start to see the pullback. It is long overdue. AMD is already starting to pull back a bit, showing some relative weakness. I don't know if this thing is going to push to try to fill this gap and then reject, or if it's just going to start downtrending more. But if you look at AMD, this thing is so far establishing lower highs, and it is actually looking relatively weak. Google reached my target. My target was around 105 on Google. We ended up going to almost 105. I'm thinking that Google might try to get back to this chop zone. We have some major resistance around 107.5 and then reject off that. That seems very, very likely and very possible in my opinion. Meta, once again, continuing to pump. My target was around, I mentioned to you guys, if we got a clean break, we have to watch this 214 area. We stopped at around 213.5, so very, very close. I wouldn't be surprised if Meta tries to go a little higher to get to about 215 to 217, and we might reject off there or even slow down a bit once we hit that level. And I do think we might start to trade a little sideways from there. Netflix has a target of about 350, maybe a little higher. In my opinion, we could get to about 350 or so. And if it does hit that level, we're going to be watching the 352.5 zone right about here. I actually mapped this out. I mapped this out before making this video. I think we could see Netflix go a little higher, but once it hits these high levels, I'd be very careful based off what it's done in the past. The dollar is at a make or break area. If it bounces, right, then we can form a double bottom, which would be bearish for the stock market, right? We got this bounce off 101.98. Now we're currently coming down to about 102. If we bounce, this could be a double bottom and this could be bearish for the stock market. But if it ends up breaking below this 102 zone, it could come all the way down to the 101s. That could be bullish for the market again. So it's very mixed. We just have to wait and see how this develops. But in my opinion, like I said, and the reason why I keep reiterating this is the market is very unusual nowadays compared to before. We keep pumping off low volume. They keep trying to squeeze shorts. They keep on trying to cause pain. But I just want to note that the market is still starting to show signs of some exhaustion. And I believe that we are due for a pullback based off these technicals. I mean, the RSIs are just so overbought. And I think we might pump a little bit more. We're not showing signs of reversing yet, but we're likely going to get closer to a top and then start to pull back. I don't know exactly how high we're going to go, but I do believe we are due for a pullback soon. I'm going to be very careful. I'm not really buying too hard at these levels in the market. I'm just waiting on the sidelines, being very patient and maybe getting ready to enter some good shorting positions. But once again, I'm being patient first and watching this play out before doing anything. So, anyways, thank you all so much for listening. Have an absolutely incredible rest of the day. Remain calm, cool, and collected. And I'll see you guys in the next one. The market to the moon because the long term future is still incredibly bright. And peace out.